The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at Thursday's trade action here, we see that it was a mostly positive day in the grain and oilseed trade, with livestock a little more mixed and a little bit to the downside there. We will discuss it and take a look at things right now, joined by our good friend Bryan Doherty of Total Farm Marketing. Bryan, always great to catch up with you, sir. I hope your week is going well so far.
Yes, sir, Jesse. No complaints.
Well, that is good to hear. Good to hear. And, last 2 days here, starting in the new month of March, it's been nice to see some green on the screen in this grain and oilseed complex. I know, end of the month there, we had plenty of chart damage done, and we were downtrending in a lot of these grains. And now we're getting a little bit of a recovery here, it appears, as we start off a new month of trade. Bryan, I wonder, is it new month, new money flow? Is that part of the equation? What do you think?
I guess it could be part of the equation. I think if we step back a little bit, if we look at the USD outlook forum, the numbers came out. I'm not sure if you and I talked about it at the time, but I thought, well, this isn't really very directional. In fact, I thought the report might be viewed as a little friendly because we were anticipating that carryout could be 2 billion bushels, and it was about 1.9 for corn. And so that was about what everybody expected. So nothing really like new there. Yet the market kind of tipped over. And so, why is that? You kind of think, well, it's a little early for that to happen. You think maybe more toward the end of the month, you might see that happen if you're anticipating acreage up and it's end of a quarter and those type of things. So a little bit surprised that things tipped over. But, you remember, it just wasn't the corn market. It was the wheat market preceded it a week earlier. And you just have a lot of money flow. And keep in mind also the value of the dollar throughout February had a pretty solid gain, and it's up again today. So those combination of things, I think the market went on pause yesterday and again today. When you start looking at maybe this weather in Argentina, February was not a good month for the corn production. If you might remember back in January, we talked about, well, it looks like the La Nina pattern is beginning to change. As likely ushers in more moisture during February. Didn't really happen for Argentina, and the near-term forecast stays pretty much hot and dry. Southern Brazil too. So I am starting to believe that maybe the fundamentalists are looking at this going, we don't have the U.S. crop in the bin yet. We don't have the Brazilian crop in the bin, and Argentina's crop certainly not going to be record. Maybe they took a little pause.
Good thoughts there. Soybeans, I know some folks were worried earlier in the week when May broke back below 15, but now back above it here around 15.09 and a quarter at the close on Thursday after a solid rally there. I know beans and bean meal, to your point about Argentina's crop, I mean, they've been the bullish stalwarts of this grain trade now for quite a few weeks. How do you feel seeing soon to be front month May beans get up here back above $15?
Well, that's a big technical indicator, and when you can do that, the key is the day after. Can you sustain it, or you're just going to flip right back under? So really encouraging, impressive day. Held most of their gains throughout the session, unlike corn. Corn had a good solid morning and then gave it up. The trick to soybeans, I think, right now is that when you look and see what happened this week, it looked like China made it cancel. First, there was rumor they were canceling U.S. beans. That didn't bear any fruit. What did bear fruit was they canceled an Argentine purchase and instead moved that to Brazil. And that may have provided a little bit of, reality that the Argentine crop's on the decline. Argentina may not have the beans to sell, or maybe Argentina even orchestrated that in order to keep beans within country for their crushing purposes. I'll take you back several weeks ago when Argentina, when they a couple of times changed how they peg their peso to whatever they peg it to, the dollar. and that opened the gate for so farmers selling picked up, and now the reality is, well, we don't have the crop, so that's not going to be unusual to maybe see some cancellations or changes, but no sign that China's canceled U.S. Bean purchases, even though that's been, major concern as the Brazilian crop inches closer and closer to heavier harvest and more beans available to the market. They could easily cancel U.S. I will say this right now: corn. I'll switch back to corn. Corn,
Mhm.
at least according to the International Grains Council, is more cheaply priced in the U.S. than it is in Argentina or Brazil. So we got our fingers crossed that'll lead to export activity.
Well, and you mentioned that export activity. I've heard some rumors in the trade that China may have bought some corn, not confirmed yet, but one has to wonder if we can maybe see something like that and start to get some of that export activity picked up. That seems to be something that we're just waiting on right now, Bryan.
It is. The market needs a tipping point, and the tipping point would be as China starts to buy in, then I think the end users more aggressively buy too, and farmer selling begins to more quickly slow.
Mhm.
Right now, there's an army of farmers out there that are lamenting that they didn't sell 2 weeks ago, and so they're getting more and more anxious to sell, worried about new crop input prices, those kind of things. But for right now, it looks like they're probably content to hold off. But boy, that's the problem is you hold out too long, and the market knows that, then the end user really kind of gets the upper hand. So in short crop years, and you have big market prices, and you carry that into the next year, I'm just a big believer in kind of selling early, selling often.
And to that point, some of that farmer selling we're seeing out there possibly. How is basis doing across the countryside? Are we holding fairly steady on a quarter bean basis right now, Bryan?
You're actually seeing corn bases pick up a little bit, and I think because farmer selling slowed.
Mhm.
Bean basis it's been strong, but it's steady. I don't think we've seen the export market to really blow that roof off. But if we can get some better sales, now today wasn't a bad sale on beans, but they've been slowing, and corn sales have been slowing. But on the bean side of the spectrum, what do we have today? 13.3 million bushels. Year to date, 17,936. And see, they're slowing now. Let's contrast that to a year ago. We've talked all fall and winter about, hey, sales are ahead of a year ago. Now they're behind a year ago. A year ago, we started to really see the drought take place in January into February for Brazilian beans. Exports picked up this year. We see good South American crop. Exports are slowing. That's the story of this year so far. We'll look for basis to fluctuate. Remember, basis isn't going to fall apart. Basis is going to stay generally firm in tighter supply years until the market really gets confident there's a crop coming. It's a little bit earlier for that.
Bryan, how about these wheat markets? Fairly solid day there Thursday. Are we maybe carving out a bottom here in wheat? I know there's some worries about the grain initiative, the Ukraine grain deal, whether or not that gets extended. I know just with the tensions with Russia and the U.S. So I wonder your thoughts with that. Is that playing into some of the strength here in wheat the last couple of days?
Maybe. I think that grain deal, if you read carefully, it doesn't look like, and I don't know if it's just posturing that Putin doesn't seem to have an interest with sanctions of extending the grain deal until sanctions are lifted. And I think the chances of lifting sanctions aren't very good. So the question is whether or not they come back to the table and figure out some kind of a negotiated something to get more export activity beyond March 19th. That being said, it's a market that really plunged pretty hard here, and I keep coming back to the rationale that sometimes wheat can move because wheat can move, if that makes any sense. It's kind of the in between market. Beans move a lot, you have a certain amount of volume. Wheat can have volume and not volume. Wheat can have stronger trends, not trends. It's produced throughout the world. There's always a supply of it available somewhere. The key focus isn't just in 2 or 3 geographic regions, but the managed money has been anticipating that there'll be flow of wheat out of Black Sea, and that crops will rebound this year. And they've been pretty stalwart in maintaining short or adding short positions.
We're having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, let's look at the livestock trade, this cattle market. I've wondered if cattle are maybe getting a little tired here at these lofty levels. We had a bit of a down day Thursday. Cash trade has been slow to develop again this week. Are we just running up against a tired market here? Are we running up against a wall in cattle?
It looks like that yesterday and today. And the reason I say that is your closes were toward the low end of the daily range. And then what's happened when you have kind of a steeper uptrend, I like to look at a lot of moving averages. The market violated the 10-day moving average yesterday and the 21-day today. It had a decisive close under the 21-day, and the last time we saw that was back about January 20th. So we've gone a whole month or about 6 weeks with a really encouraging, impressive futures market. But it does look tired. It kind of got into that 161 area, probed that 3, 4, 5 days, and then kind of pulled off here. Let's not confuse it, though, with an idea that all of a sudden we think the cattle market's ready to tumble. The cutout values continue to sizzle. They're higher. They continue to look strong. You're talking over 180 in choice cuts. The demand side is still there. We've questioned, well, when does it stop being there? I think I'm going to be profound here. It stops when it stops. Right now, it's done a little better than we would have thought. That might be a little better perspective of the market, anticipating that demand will hold firm, interest rates likely on the rise, and inflation a concern. But so far, the consumer has picked it up and willing to buy. So why is that? Why aren't they saving their money, or why are they using big ticket? I don't think. I think a lot of consumers, we're back to about 4% living paycheck to paycheck. So they'll buy for the immediate, but they're not buying long term, planning long term. It's kind of a poor state of affairs in the economy, but that is where I think some people are at. They're willing to eat out, but they probably aren't going to take a big vacation.
Sure. Well, and one theory that I had started to develop here was watching how if the stock market would go up, usually cattle, hogs would go with it to some degree, or vice versa, go down. And then, well, I look today, the Dow higher, cattle lower. So maybe that theory is kind of shot out of the woods there. I'm not a broker or analyst, but I just, to your point about the economy, I think that is still very closely tied with these cattle and hog markets, just watching demand and watching export demand, retail demand, etc. Here, I'm with you on the whole economic picture playing into this, Bryan.
It's cautious. The key is, so we talk about the economy and people talk about slowing the world recession, but the unemployment rate is still low, so people still have a paycheck. So what are they doing with it? Where are they going with it? And so it just seems like they're willing to chase the protein markets. And I don't eat out often. When I do, I'm amazed at how many people are eating in the protein market. The restaurants are not skimpy, they're full.
On the hog picture, hogs had a little bit of a down day. Export sales for the week were a fairly solid number again, down from last week's big number, but still solid, yet felt like that supported us early, and then that support kind of faded through the session, Bryan.
Yeah, I think until the market really sees that cash index pick it up and give the traders confidence, you're talking about big premiums on deferred months. And then as the deferred months come closer, as is, for instance, April, 83.85 right now. I look at the index, 78.58, still holding that premium. So all of a sudden, April tips over $110 today. Not a shocker there. The premium or the cash market, I should say, is not advancing at a rapid pace. It is steadily working its way upward. But it's, the problem is the futures probably got ahead of themselves a little far. And again, that mid 105 area, mid 110 area, around the 105, seemingly good areas to be hedging some of the summer months.
Bryan, how about that dairy market trade? Anything you're seeing there as we start off the month?
No, what I'm seeing is the same old thing. We've talked about this time and time again. I think dairy producers are in a phase where they're going to try and produce their way out of product, or less dollars per animal, and so you produce more. And I think that's the phase that they are in right now. Unfortunately, that means limited upside for the dairy market until we get just a much better feel that the herd may start to contract a little bit. It's funny here is you've got high priced corn and the herd is still growing. yet you've got high-priced beef, and you'd think you might be shrinking the herd, getting rid of cows that don't fit or heifers that don't look like they're going to take. And that really hasn't seemingly been the case. So usually when we see beef prices this high, we see a whole lot of liquidation in that dairy industry, and we're not seeing the sign of that yet.
Well, Bryan, great stuff as always. Before we let you go, any final thoughts? Anything else you want to reiterate for our listeners, viewers here today?
Yeah, I think this week, this past week, since last time we met last Thursday, is it's a reflection again just how quickly markets can change and go. I'm going to say primarily lower, and it didn't take corn, beans, wheat long to peel off some pretty substantial values. So just kind of keep that in mind as you're looking ahead and asking yourself, well, what's different from this year than last? It's a lot different. And right now the bears seem to be more in charge, and although it could be temporary, I would say if you're not to where you want to be on sales, don't lament what could have been maybe a few weeks ago or even last week. Just get current, get to where you need to be.
Bryan, if folks have questions, want to reach out to you and the team there at Total Farm Marketing, I know a lot of different ways to get in touch. How can they reach you?
Best way is our 800 number, 800-334-9779. Give me a shout. Send me an email, Bryan with a Y, at totalfarmmarketing.com, or check out our website, www.totalfarmmarketing.com, and take a look. We have a lot of resources on there.
Fantastic. Bryan Doherty with Total Farm Marketing. Always a pleasure, sir. Thanks for joining us. I'll see you in person next week at Commodity Classic in Orlando, Florida. Look forward to it.
Yes, sir. Yep, we're looking forward to that. Thank you, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.